Good morning, Thursday 23rd of March. So just taking a quick look around the markets this morning, and in terms of actual overnight news flow, I'd say there's not a great deal of new things to really talk about. A couple of things to discuss really that will be probably pertinent for the day ahead though. So firstly, a quick look at the charts, and really a summary of yesterday was a very difficult day with the market, you could say, somewhat after such a big move that we had on the prior day with that big sell-off in US equity markets that kind of sparked that risk, that flight to quality bid in other assets. You had such a good trading day in that respect in terms of the opportunity and price movement being, for the first time in a while, a little less volatile and more one-directional. That coming into yesterday's session, it was obviously a difficult one to kind of manage psychologically. I know both Will and I talked about that, and how that you kind of have to reevaluate and look objectively at the day, and quite often what you see in these markets is when you do have a big day or a bout of volatility, especially when it wasn't really triggered by one single kind of comment or headline, then typically the day after it's almost like pent-up frustration. The market trades it with such intensity and volume that the accompanying day tends to be very quiet. It's almost like the calm after the storm, so to speak. And when you actually start looking at the week and the kind of timeline of what the market is concerned about, certainly this House vote on the repeal of Obamacare, which we'll talk about in more detail shortly, that's not really happening until later on this evening. And as such, maybe the market just deciding that that's a fairly significant event for how it's kind of a bellwether event for how people will perceive then Trump's ability to be a man of action going forward on more bigger fiscal policies, that we'd rather sit on the sidelines and actually await now what he has to say. And so, just looking here at the moment, the S&P is pretty flat. The European indices just slightly negative, with the DAX sitting just sub the pivot at the moment. Had a little look lower, but failed to really push in toward the low points we got to yesterday. And obviously you've got S1 still quite away from current price action. Yeah, when I look at the S&P, that really 2350, that R1 has provided a degree of resistance overnight during the Asia session. So you can see we've kind of paired probably a third of that big sell-off that we had. And if I look a slightly more longer dated, we were looking at this chart yesterday when we were looking at the setup and the strategy. And really 2 points of interest that we were looking at was that level didn't really hold up too much resistance at the time when we were looking at the price action around the open yesterday. But certainly that we just talked about 2350 being the R1 overnight resistance, and you've kind of got that level there coming in. That was on the 9th of March. That's going on 2351. So it seems like a pretty good upside level there. If you're of the belief that this move kind of feels warranted, at least maybe not to be all the way down, but at this point there's still a little bit of caution in the market, so maybe just an interesting level to keep an eye on around that R1, given that longer dated technical level as well sitting just above it may offer a bit of protection with a stop just above R1, playing the short if it gets back up there again. Obviously with any of these ideas that you look at this time of the day, you've got to reassess it nearer the time. Obviously monitoring the conditions, the volume, any headline changes fundamentally that may have changed the setup, because that looks technically sound now, but fundamentally the situation could be different between now and when it gets to that point, which may not be until the US come in and later on this afternoon. So you kind of got to take stock at the time whether it's still a valid idea. Elsewhere, looking at the pound, had a couple of questions this morning already about this, because you'll notice that at 6:30 cable spiked quite quickly, about 25-30 pips, and then has reversed, and when some of the guys were coming in it was selling off. Obviously there's still a lot of media attention about this situation that occurred in Westminster yesterday. That's the media will continue to play that story, but as far as market movement is concerned, that that kind of event is finished. But looking at the actual movement here, if I put my cable futures on a minute chart, really what I want you to look at here is when you were coming in 6 o'clock. Obviously we've seen some quite erratic movement around 6 o'clock in recent weeks, but you can see here how illiquid really it's trading at that time of day. There's not a lot going on. As I said at the very beginning of this briefing, there's not really a lot of news coming out, so no one's really wanting to enter this market as well ahead of the House vote. And so it looks like maybe just a few orders have come in, maybe a few stops hit, and then it just chases the price up higher, quite quick fashion. That when I see a candlestick as well that's so aggressive like that, and it's spiked, we've gone from here, kind of 20-30 pips in pretty much a minute. That to me strikes more of a flow-related move, because when I'd look immediately to headlines, there is nothing that's come out. And so then you get this natural retracement that comes back down. Then actually, if you look after some of the selling that was around 7 o'clock, we're literally back to exactly where the point was before the spike. So net neutral, which tells me that really this is nothing fundamental that's changed that view or caused some of this movement. It literally is just price movement. It's just order flow going through the market. It's fairly quiet, fairly illiquid, and it's caused some a degree of mild volatility in that price action. When it's like that, obviously it kind of makes it a little tricky to trade, because fundamentally there isn't really any direction, and I think that's kind of the situation across these assets at the moment. The market's a little bit undecided. It's almost like it's still gathering itself after that big move that we had earlier in the week, that negative move, as to where do we go from here. So that being said, then overall, and we'll talk about it more on that House vote, but I would say you want to have a degree of realism to what might be on offer ahead of having more clarity on that situation in the US House, in Congress. Okay, so let's have a quick look at some of the news then. A couple things to be aware of. Firstly, I just want to look at some economic data out of Germany, because I think this tells a growing theme in Western Europe. And when I say Western Europe, I'm going to include the UK for the time being. But the GfK Consumer Climate Indicator for Germany, that came out earlier this morning, and it came out at 9.8. It was a touch below expectations. As you can see here, though, the thing that I want you to look at is this is basically consumer confidence in Germany, and over the last 3 months, so February, March and April, it's been on quite a steady decline. Now, why are German consumers becoming less optimistic? Well, look at the inflation rate of Germany, and then think about what we've just had from the UK in terms of inflation this very week. Yeah, you'll see it pretty much mimics almost exactly the same as what we've had in the UK. Inflation, especially if you look at November going into December, we jumped in German inflation from 0.8 to 1.7%. That's a phenomenal leap when we've had pretty much near zero inflation for such an extended period. So inflation is ramping higher in Germany. It's kind of leading the way, if you like, because inflation rate in Germany now is at its highest since August of 2012. What does that mean? It's the same situation as what we've been talking about here in the UK. Prices of goods go up, wages are not rising at the same pace, people have less money, they become less confident, and hence you're starting to see this feed through into other economic indicators. So you're getting quite a correlation of economic performance, I'd say, in a lot of these European nations like Germany that are in a similar situation now that inflation is starting to rear its head, which is a prevalent theme across other nations. Now, Germany is one thing. If inflation then starts to become rampant in the likes of Italy, let's say, for example, or other nations in southern Europe like Portugal or Greece, obviously this has negative connotations as to what that could mean given their more weaker situation economically. So something to keep an eye on. Although this data, I'd say, largely hasn't really had much of an impact this morning. Okay, the big one then that people are looking for is this situation It's about basically the American Healthcare Association. So it's a vote on that in the House. Clues as to how revolutionary a Trump administration can be. Will it or will it not pass? Is that then a pre-indicator of Trump's ability to get the job done? I did see an excellent quote, which was during the campaign kind of trail, Trump, his kind of main thing was that he managed to persuade Americans that while Barack Obama was a man of words, Trump is a man of action. And thus far, we've seen very little action. So this is why this event has kind of grown in significance, and why it's become an important thing is because there's been a little bit of pushback on whether he can actually deliver. So House Conservatives, known as the Freedom Caucus, said 25 of its members would oppose the healthcare plan, which basically means there's not enough votes to pass it. So hardline conservatives, so to give you a bit of a summary from what this exactly is for those who are not kind of completely up to speeds, this is in the FT this morning. They've reported that hardline conservatives basically argue that the healthcare measure is too expensive and does not go far enough to eliminate the government's role in Obamacare. So obviously they want to distance themselves from that. Their whole campaign was about this, which was a staple of Obama's kind of presidency, was to get rid of it right from the beginning. The problem is that more moderate Republicans worry about forecasts that show it would result in 24 million Americans losing health insurance. Now, Trump and his style of management, I would say, the thing that's quite worrying, I mean, it's certainly if you were in the Republican Party, is he's basically warned Republican lawmakers that voters will punish them in the 2018 congressional elections if the party fails to follow through on their campaign promise. He started talking quite aggressively to some of the other internal politicians, if you like, to make sure that they're on side. The White House bill, or White House passing the bill, necessary then, according to some, to unlock funds that would help convince then the more fiscally conservative Republicans to support his tax reform plans. And that's really where the balance of power lies, is as far as how the market is priced at this point. And let's face it, that big sell-off that we had 2 days ago was just a drop in the ocean to the rally, the phenomenal rally we've had in equity markets really since the election. That was nothing compared to the big size move that we've had. And so actually then, this failing, the market is going to perceive it as an extension then to the timeline of any fiscal policy coming in, number one. And then number two, his actual ability for that to actually be voted through the House and Congress and to get approval and to be actioned. That then would be, well, let's just have a look at this is the DAX. Let me get the S&P or the Dow up. Okay, so I've already got this marked up from previous, so it's ready to go. But let's have a look at the chart and where we kind of have been. Obviously we talked about this before, the election night low to the high where we were trading above 21,000 briefly. We've rallied just a small 22% in the Dow Jones in a period of about 5 months, which is just phenomenal really, on a promise of fiscal action. The sell-off that we had on the 21st was 1.3%. So, just putting things into a bit of perspective here. What it does mean, though, is that on the downside, there's obviously, if the market decides to question then, if this doesn't go through, these question marks on his ability to succeed, then there's a large scope for quite an aggressive pullback in these current market prices. You remember what we talked about yesterday, that Bank of America funds investor survey, which basically said that most fund managers are saying that US equities are their most overvalued they've been since 2001. So the market, it doesn't need much, I don't think, for it to start seeing a few repetitions of what we did see on Tuesday. And so downside obvious target would be a reversal back to the 20,000 and then back to 19,000. I would say these things are definitely not unreasonable targets over a matter of kind of probably just, it wouldn't take more, I would say, than a matter of weeks to get all the way back down to that kind of 19,000 to reverse all of that move, or the large portion of it that we had since really December and through the beginning of 2017. So it does carry a big amount of significance, this event. Actual timing of it, though, I've asked around, and at the moment there is no set time as far as I can find. At 3:30 London time, Trump, so the president, is meeting basically with the Freedom Caucus again to have further talks, because obviously he wants to make sure they really are the power brokers in this going through or not. He needs to be ultra sure that they're going to back him before going into that house to vote. And so until he has that, I'm sure this thing might go on, and actually it might not even happen until late at night, which means that ultimately we might not know what the situation is until tomorrow morning, which means could be in for a very quiet session again, unfortunately. So again, it's all just about looking ahead, and then you can kind of get a better balance of how aggressively or not that you should be trading these markets, and then kind of being flexible to that. Okay, a quick look at one other thing before we look at the calendar. And I'm just really covering this because it's something which the newer guys might not really be aware of. And these are called targeted long-term refinancing operations, TLTROs. I'm sure someone like Will know of these, because when these first came about, they were actually tradable opportunities, whereas nowadays I'd say they've been viewed as more of a functioning of the banking system to provide liquidity, cheap money, to basically grease the wheels of the economy. That was why they were created. I'll just quickly give you a summary of what it is. So the ECB about to give lenders a last offer of free long-term cash. So essentially as we go into negative deposit rate, so you're penalising banks for depositing cash into with the central bank. The objective of a negative rate chiefly is to then force the bank into lending the money into the economy. So it's a stimulative measure to keep rates low and a stimulative environment. You then offer basically an artificially low amount through these one-off item auctions or TLTROs, so then for a bank to take multi-billions of euros if necessary on the cheap 4-year loan to lend through into the economy, because once they have that on their balance sheet, essentially they need to lend it because they can't deposit it anymore. So that was kind of the theory. Now, why this is important is, if you remember, the press conference we had most recently with Draghi was deemed to be hawkish. And one of the main reasons why it was hawkish was because he said that this TLTRO we're going to see today is the last one. And so that means that this cheap money for banks is coming to an end. That is a slight mild move away from such an accommodative policy that the ECB have had. So the reason why the press are making, or the financial press at least, are making a bit of a deal about today's issue is because if you've been keeping up to date with the press and the FT and articles and opinion pieces, a lot of people are talking about the premise that actually the ECB might not follow the Fed model. Fed model being we finish QE, taper, and then we have a period of kind of economic or policy, monetary policy continuity, and then we look to raise rates. So this is kind of the curve of coming out of a very extreme policy, unwinding, finishing one before then going into rate normalization. What opinion pieces have been saying is about the ECB could in effect continue running QE as it is planned to at this point to the end of 2017, but they could start bumping the deposit rate back up again. So they could actually start raising interest rates because there's three, don't forget, major ones. They could start raising the deposit rate whilst also maintaining QE, which is a slightly different theory in itself. If then rates are going to be going up, what do you think banks are going to want to do if the ECB are offering you this one last opportunity to get a massive jumbo loan for 0%? You're going to go, yep, thank you very much. I'll take 750 billion. If I can have that, please. And actually, that's the top end of the Bloomberg estimates today. That banks collectively, now don't forget, there is a wild range of expectations here from all of the investment banks that have been surveyed by Bloomberg. It could be as low a take-up as 30 billion, could be as high as 750 billion. The median estimate is 110 billion. Now, back in the day, traders used to trade this as they used to try and make it a little bit more binary in the fact that we were trying to monitor the health of the banking system and individual banks and their capital levels. The higher the number, the worse the banks were deemed to have been, because they were taking advantage of then replenishing themselves with this money. That was how traders used to trade it a number of years ago when these first operations came about. So the lower number, the less the banks need it or want it, so therefore they're in a stronger state anyway. And so maybe this might get some attention, but I would quite honestly say that I've not really seen these events from TLTROs move the market for a considerable period of time. The way I would review this event, and if I remember rightly, these used to come out at around 11 a.m. If it's 750 billion, I would imagine you might start to see a little bit of movement, certainly in the DAX future, but then also knock-on effect then in the euro and the bund possibly. So maybe just I'll be monitoring that, and I'll keep you posted when it does come out. Okay, quick look at the calendar then to wrap things up. The main figure of this morning for sterling traders, you have retail sales. Now, of course, retail sales has been actually a tradable event for the pound because it's pretty much disappointed on the last three occasions. We've gone negative for 3 consecutive months in UK retail sales. This again falls into that argument of consumers tightening their belts amid price pressures on households' incomes. So keep an eye on this. This is coming out usual time for UK data, 9:30. Obviously, Pivot providing a bit of support thus far for the cable pair, but Eurodollar's just been edging a little lower through the Asia Pac lows as I've been speaking, coming within sight here of S1. S1 lining up with that low print that we had around the European morning. So a couple of interesting levels there just coming up in the euro, in the currency pair here, top left. But we'll probably see a bout of volatility on this retail sales number. So definitely worth keeping an eye on that. Otherwise, pretty quiet for economic data. The weekly jobs data to be monitored, but I don't think it really is a game changer now. Policy changes from the Fed not going to be coming for quite a while as yet. New home sales, likewise with the existing numbers yesterday, minimal impact expected again. Likewise, these regional type surveys. Obviously, these regional manufacturing surveys have been particularly strong in the US. So unless you get something exceptionally weak, again, not expecting much impact. The other thing, though, that does look a little bit more interesting is you've got Janet Yellen speaking today at midday. So Yellen speaking at a research conference. And given, as we said at the beginning of the week, there is 10 Fed speakers that have spoken or are due to speak this week. Half of those have already spoken, and really no one's really said anything other than it seems like the Fed just wanted to get the job done on a hike and continue on the projected path that they were already on. That seems to be the communication. So Yellen is speaking at midday. That's obviously right in the middle of our session, so I'd definitely be keeping an eye on what she has to say. Around her, you also have Broadbent this morning. It's coming up in about 15 minutes time. So Bank of England MPC member. And obviously with the board turning hawkish in respect to a dissenter in Christine Forbes, I would not be expecting Broadbent to be as hawkish, but definitely worth hearing what he has to say if he comments on inflation. You've got ECB's Lautenschlager, a hawk at 3 p.m, and then you've got the uber dove of the Fed, Kashkari speaking later at 4 p.m. So quite a few things there on the speaker front. Don't get caught in a trade around when one of these are coming out. You want to probably be out of it, waiting for what they've got to say, and then if it's something important, then looking to react to that. Okay guys, coming up to 9 o'clock then, so Euro I can see has just broken that level now. So have a good session. Again, we could be in for a fairly quiet one given the importance of this vote that Trump's trying to push through in regards to the healthcare plan. So keep that in mind. Unless something snap fundamental news happens, you might want to be a little bit more conservative rather than aggressive on a day like today. Okay, good luck, and I'll see you in the chat room.